The stock market is a device for transferring wealth from the impatient to the patient. Warren Buffett. Welcome to the Young Investor Blueprint, a comprehensive investment education program by SimplifyForMe Academy. Whether you're a complete beginner taking your first step into the world of investing or someone looking to build a structured understanding of financial markets, you've come to the right place. Thank you for joining us. Let's begin this exciting journey toward becoming a confident and knowledgeable investor. The Young Investor Blueprint is much more than a collection of investment lessons. It is a carefully structured learning journey designed to transform complete beginners into informed and confident investors. Many people enter the stock market after hearing success stories from friends, social media, or television. Unfortunately, investing without proper knowledge often leads to costly mistakes. Our goal is different. We believe that every successful investor should first build a strong foundation of financial knowledge before making investment decisions. This curriculum follows a logical progression, from understanding basic concepts to analyzing companies and markets, and finally applying that knowledge to real investment decisions. Each lesson builds upon the previous one, ensuring that your learning remains systematic, practical, and easy to understand. Every successful journey begins with the right philosophy. The Young Investor Blueprint is built upon two guiding principles. The first is knowledge first. Successful investing is not about finding secret tips or predicting tomorrow's stock prices. It begins with understanding how financial markets function, how businesses create value, and how wealth is built patiently over time. The second principle is rational decision-making. Financial markets often trigger emotions such as fear and greed. Successful investors learn to control these emotions and base their decisions on facts, analysis, and well-defined processes rather than speculation or impulse. Throughout this course, we will emphasize disciplined thinking, logical analysis, and continuous learning, the qualities that distinguish successful investors from the rest. To make learning effective and progressive, the curriculum has been organized into 4 clearly defined levels. At the center lies the main program, which forms the core of your investment education. Supporting it are several subcourses, each focusing on a specific area of investing in financial knowledge. Within every subcourse, you'll find modules where related topics are grouped together to create a structured learning experience. Finally, every module consists of individual lessons that explain concepts step by step in a simple and practical manner. This hierarchical structure ensures that learning remains organized, measurable, and easy to follow, allowing you to gradually build expertise without feeling overwhelmed. Learning investing is very similar to climbing a mountain. You don't reach the summit in a single step. Instead, every stage prepares you for the next. This program follows exactly the same philosophy. Each stage introduces new concepts while reinforcing the knowledge gained previously. As you progress, your understanding becomes deeper, your analytical abilities become stronger, and your confidence grows naturally. Rather than memorizing theories, you will develop practical skills that can be applied to real financial markets. By following this structured pathway, you will build a solid foundation that prepares you for more advanced concepts in the later stages of the program. Remember, consistent learning and disciplined practice are the true keys to long-term investing success. We now begin with Level 1, the foundation of the entire curriculum. The main program is titled the Young Investor Blueprint because it provides the roadmap for your complete investing journey. This level has been divided into 4 progressive subcourses, each designed to build a specific set of knowledge and skills. The central premise of this program is simple: understanding markets before building your money at risk. Before investing even a single rupee, it is essential to understand how financial markets operate, how businesses create value, and how investment decisions should be made. By mastering these fundamentals first, you'll be able to approach investing with confidence, clarity, and a disciplined mindset, qualities that remain valuable throughout your investment journey. Having understood the overall structure of the program, let's now take a closer look at the 4 subcourses that make up the Young Investor Blueprint. Each subcourse has been carefully designed to build a specific set of knowledge and skills, creating a logical progression from basic concepts to advanced investment decision-making. We begin with Subcourse 1, Understanding Markets Before Investing, where you learn how financial markets function and develop a strong foundation in market dynamics. Next comes Subcourse 2, Understanding Businesses Before Buying Stocks, where the focus shifts from markets to companies. Here, you learn how to evaluate businesses before becoming their shareholders. The third stage, Investment Analysis and Portfolio Management, teaches you how to analyze investment opportunities, assess risk, and build well-balanced portfolios. Finally, Building Long-Term Wealth brings everything together by introducing strategies for sustainable wealth creation, disciplined investing, and long-term financial success. Together, these 4 subcourses create a complete roadmap that transforms beginners into informed, confident investors. We now begin our first subcourse, Understanding Markets Before Investing. Before purchasing any stock, every investor must first understand the environment in which those stocks are traded. Financial markets are dynamic systems influenced by economic activity, investor sentiment, government policies, and global events. In this subcourse, you learn about stock market indices such as the Nifty 50, understand how the market infrastructure operates, and discover how publicly available information influences investment decisions. We'll also explore the relationship between the Indian economy and financial markets, helping you understand why market movements occur and how investors interpret them. By mastering these concepts first, you'll develop a solid market perspective before moving on to analyzing individual companies. Subcourse 1 has been divided into 3 carefully structured modules. Module 1 introduces the Nifty 50, India's benchmark stock market index. You'll understand what the index represents, how it's constructed, and why it serves as an important indicator of the Indian economy and equity market. Module 2 focuses on using the NSE website like a professional investor. You'll learn how to locate reliable market information, access publicly available financial data, and confidently navigate one of India's most important financial platforms. Finally, Module 3 expands your perspective by examining the relationship between Indian markets and global financial markets. You'll understand how international developments influence domestic markets and why global events often affect investment decisions in India. Together, these 3 modules establish the essential market knowledge every successful investor should possess. Once we understand how markets operate, the next logical step is understanding the businesses that trade within those markets. Buying a stock is not simply purchasing a ticker symbol. It is becoming a partial owner of a business. Therefore, successful investing requires the ability to evaluate companies objectively rather than relying on market rumors or temporary price movements. In this subcourse, we learn how businesses generate revenue, earn profits, manage assets and liabilities, and create value for shareholders. You'll begin developing the analytical mindset used by professional equity research analysts to distinguish fundamentally strong companies from weaker ones. This knowledge forms the foundation of intelligent stock selection. Subcourse 2 consists of 5 comprehensive modules that introduce the key principles of business analysis. We begin with annual reports, where you'll learn how to read one of the most valuable documents available to investors and identify the information that truly matters. Next, we'll study financial statements, including the income statement, balance sheet, and cash flow statement. These documents reveal the financial health and operational performance of a company. The third module focuses on ratio analysis, helping you convert raw financial data into meaningful insights using commonly accepted financial ratios. We'll then explore business quality, learning how to assess management effectiveness, competitive position, and operational excellence. Finally, we'll examine economic moats, one of the most important concepts in long-term investing. You'll discover how companies build sustainable competitive advantages that allow them to outperform competitors over extended periods. Together, these 5 modules provide the analytical toolkit required to evaluate businesses with confidence. One of the defining characteristics of exceptional businesses is the presence of an economic moat. An economic moat is a durable competitive advantage that protects a company from competitors, much like a castle is protected by its moat. These advantages may come from strong brands, technological leadership, cost efficiency, network effects, patents, high customer switching costs, or exceptional management. Companies with wide economic moats are often better positioned to maintain profitability, defend their market share, and continue growing over many years. For long-term investors, identifying businesses with sustainable competitive advantages is one of the most powerful ways to improve investment outcomes. Throughout this course, you'll learn practical techniques to recognize these qualities before making investment decisions, allowing you to focus on businesses that can create lasting shareholder value rather than chasing short-term market trends. Having developed a strong understanding of financial markets and learned how to evaluate businesses, we now move to the third stage of our journey: investment analysis and portfolio management. This is where knowledge begins to transform into practical investment decisions. Successful investing is not just about identifying good companies. It is also about determining whether they are fairly valued, deciding how much to invest, managing risks, and building a diversified portfolio. In this subcourse, we'll explore the principles of valuation, understand different investment styles, study investor psychology, learn the science of asset allocation, and discover how professional investors construct portfolios that align with specific financial goals. By the end of this section, you'll have a structured framework for making disciplined investment decisions rather than relying on emotions or market speculation. Subcourse 3 consists of 9 comprehensive modules, each focusing on a critical aspect of professional investing. We begin with valuation, where you'll learn the principles of determining what a business is truly worth and how professional analysts estimate intrinsic value. Next comes analysis, where we'll examine both sector analysis and methods for evaluating a company's future growth potential. The third area focuses on behavioral finance and asset allocation. Here, you'll understand how human psychology influences investment decisions and why proper diversification is essential for long-term success. Finally, we'll study portfolio and risk management, including portfolio construction, mutual funds and ETFs, and practical techniques for identifying, measuring, and managing investment risk. Together, these 9 modules provide a complete toolkit for transforming knowledge into sound investment strategies. Valuation is often described as the heart of intelligent investing. No matter how outstanding a company may be, buying it at the wrong price can significantly reduce future returns. In Module 9, you'll learn the fundamental principles of valuation. We'll explore concepts such as intrinsic value, market price, margin of safety, and why successful investors always distinguish between price and value. In Module 10, we'll move beyond theory into practical application. You'll learn commonly used valuation methods employed by professional analysts, understand how to estimate the worth of a business, and appreciate the assumptions behind every valuation model. By mastering these concepts, you'll develop the ability to make investment decisions based on value rather than market excitement. One of the most important decisions every investor must make is choosing an investment philosophy. 2 of the most widely followed approaches are growth investing and value investing. Growth investors focus on companies expected to expand rapidly in the future. These businesses often trade at higher valuations because investors anticipate strong earnings growth and increasing market opportunities. Value investors, on the other hand, seek companies whose market prices are lower than their intrinsic value. They look for opportunities where the market has temporarily underestimated a company's true potential, creating a margin of safety. Neither approach is universally superior. Each has its strengths, risks, and suitable market conditions. Throughout this course, you'll learn when each philosophy is appropriate and how disciplined investors often combine elements of both to build successful long-term portfolios. Even the best investment strategy can fail if emotions take control. Behavioral finance studies how psychological biases influence financial decisions. Human beings are naturally affected by emotions such as fear, greed, overconfidence, regret, and loss aversion. These emotions often cause investors to buy during market euphoria and sell during periods of panic, the exact opposite of what successful investing requires. In this module, you'll explore the most common behavioral biases and learn how they influence investment decisions. More importantly, you'll discover practical techniques to recognize these emotional traps, develop disciplined decision-making habits, and remain focused on long-term financial objectives. Mastering your own behavior is often a greater competitive advantage than mastering financial calculations. One of the most powerful principles in investing is that long-term success depends not only on selecting good investments but also on allocating them wisely. This module introduces 3 essential concepts. First is asset allocation, where you'll learn how to distribute investments across asset classes such as equities, bonds, cash, and other instruments according to your financial goals, risk tolerance, and investment horizon. Second is portfolio construction, which focuses on combining different investments into a balanced portfolio. You'll understand diversification, position sizing, and portfolio rebalancing techniques that help improve long-term stability. Finally, we'll study risk management, learning how to identify, measure, and control investment risk through diversification, protective strategies, and periodic portfolio reviews. These principles are used by professional portfolio managers worldwide and form the foundation of disciplined, long-term wealth creation. As we continue building our portfolio management skills, we now turn our attention to 2 of the most widely used investment vehicles in the world: mutual funds and exchange-traded funds, or ETFs. Not every investor has the time, expertise, or interest to analyze and manage individual stocks. Mutual funds and ETFs provide an efficient alternative by allowing investors to gain exposure to professionally managed and diversified portfolios. In this module, you learn how mutual funds and ETFs work, how fund managers construct portfolios, and how these investment vehicles help reduce risk through diversification. We'll also discuss important concepts such as net asset value, or NAV, expense ratios, tracking error, liquidity, and how to choose the right fund based on your investment objectives. By the end of this module, you'll understand when mutual funds or ETFs may be more suitable than direct stock investing and how they can become an integral part of a well-balanced investment portfolio. We now arrive at the 4th and final subcourse of the Young Investor Blueprint, Building Long-Term Wealth. Everything we've learned so far, from understanding markets and evaluating businesses to portfolio construction and risk management, comes together in this final stage. Investing is not just about selecting good stocks or earning attractive returns. The real objective is achieving long-term financial independence through disciplined planning and consistent decision-making. In this subcourse, we'll focus on practical personal financial planning, goal-based investing, tax-efficient investment strategies, risk protection, retirement planning, and wealth preservation. Our objective is to transform investment knowledge into a lifelong financial framework that helps you build, protect, and grow wealth with confidence. Subcourse 4 consists of 7 interconnected modules, each addressing an important aspect of personal wealth creation. We begin with personal financial planning, where you'll build a strong financial foundation by understanding budgeting, savings, and net worth management. Next comes goal-based investing, where you'll learn how to align your investments with specific life objectives such as education, buying a home, or retirement. We'll then study tax-efficient investing, helping you understand how proper tax planning can significantly improve long-term investment returns. The next module focuses on insurance and risk protection, ensuring that unexpected events do not derail your financial journey. Finally, we'll conclude with retirement planning and financial independence, bringing together all previous concepts into a comprehensive lifetime investment framework. Together, these 7 modules provide a practical roadmap for achieving lasting financial security. Every successful investment journey begins with a well-designed financial plan. Before investing aggressively, it's important to understand your current financial position, spending habits, savings capacity, and future financial responsibilities. In this module, you learn how to prepare a personal financial plan by assessing your income, expenses, assets, liabilities, savings rate, and overall net worth. We'll discuss the importance of budgeting, creating emergency funds, managing debt responsibly, and developing healthy financial habits that support long-term wealth creation. A strong financial plan serves as the foundation upon which every investment decision should be built. When your finances are organized, your investments become more purposeful, disciplined, and aligned with your long-term goals. Successful investing becomes much easier when every investment has a clear purpose. That is the philosophy behind goal-based investing. Instead of investing randomly, you'll learn how to categorize your financial goals into short-term, medium-term, and long-term objectives, each requiring a different investment strategy. Short-term goals may include building an emergency fund or saving for a major purchase, where safety and liquidity are the priorities. Medium-term goals, such as higher education or purchasing a home, require a balanced approach that combines growth with controlled risk. Long-term goals, particularly retirement and financial independence, allow investors to benefit from the power of compounding through long-term equity investing. By matching investments with specific goals and time horizons, you'll create a portfolio that is both meaningful and financially efficient. Generating investment returns is important, but keeping those returns is equally important. This is where tax-efficient investing becomes an essential part of financial planning. Many investors focus only on investment performance while overlooking the impact that taxes can have on their long-term wealth. In this module, you'll understand how different investment options are taxed and learn strategies for legally minimizing tax liability while remaining fully compliant with applicable regulations. We'll discuss concepts such as long-term capital gains tax, short-term capital gains tax, tax-saving investment options, tax-advantaged accounts, and the importance of timing investment decisions to improve after-tax returns. Tax-efficient investing is not about avoiding taxes. It is about making informed financial decisions that maximize the amount of wealth you ultimately retain. By incorporating tax planning into your investment strategy, you can significantly enhance your long-term financial outcomes while staying aligned with the law. Building wealth is only one part of financial success. Equally important is protecting the wealth you have worked so hard to create. Life is unpredictable. Medical emergencies, accidents, disability, loss of income, or damage to valuable assets can create financial setbacks if adequate protection is not in place. In this module, we'll understand the role of insurance as a risk management tool rather than an investment product. You'll learn about life insurance, health insurance, term insurance, and other forms of financial protection that safeguard both you and your family. We'll also discuss the importance of identifying potential financial risks, assessing their impact, and implementing strategies to reduce or transfer those risks. A strong financial plan is built on two pillars: wealth creation and wealth protection. This module ensures that your long-term financial goals remain secure even when life presents unexpected challenges. Retirement planning is not something that begins a few years before retirement. It begins with your very first investment. The earlier you start, the greater the power of compounding works in your favor. In this module, we'll explore three important aspects of retirement planning. First is time horizon, where you'll learn how your age and investment horizon influence investment choices and risk-taking capacity. Second is corpus building, which focuses on estimating the amount of wealth you'll need for retirement and creating a disciplined investment strategy to achieve that goal through regular contributions. Finally, we'll discuss withdrawal strategies, how to generate sustainable income from your retirement savings while ensuring that your wealth continues to support your lifestyle throughout retirement. By planning early and investing consistently, you can transform retirement from a financial concern into a period of independence and security. The ultimate objective of investing extends beyond earning attractive returns. It is achieving financial independence. Financial independence means reaching a stage where your investments generate sufficient income to support your lifestyle without depending entirely on active employment. In this module, we'll learn how to calculate financial independence, estimate required investment income, and understand the relationship between expenses, savings, and long-term wealth accumulation. We'll also discuss wealth preservation, an equally important concept. Creating wealth is only half the journey. Preserving it across changing economic conditions and generations requires careful planning, diversification, disciplined investing, and periodic review. Finally, we'll introduce the lifetime investment framework, which integrates everything learned throughout this course into a flexible, lifelong investment strategy that evolves with your financial goals, life stages, and market conditions. This framework ensures that investing becomes a lifelong discipline rather than a one-time activity. Now that we've explored the complete curriculum, let's understand how the course itself is organized. At Level 3, The curriculum is divided into modules, which serve as the principal instructional units within each subcourse. Each module focuses on a clearly defined subject area, allowing learners to study one concept thoroughly before moving to the next. This focused approach prevents information overload and makes learning more structured and effective. Another important feature of the curriculum is prerequisite sequencing. Every module builds upon the knowledge gained in previous modules. For example, before learning to analyze businesses, you'll first understand financial markets. Before constructing a portfolio, you'll first learn valuation and investment analysis. This logical progression ensures that every new concept builds naturally upon an existing foundation, making the learning experience both comprehensive and easy to follow. Within every module, you'll find individual lessons, which represent the smallest and most practical learning units in this program. Each lesson is carefully designed to focus on a single concept, allowing you to learn systematically without becoming overwhelmed. Every lesson begins with clearly defined learning objectives, so you'll know exactly what you are expected to understand by the end of the session. The instructor then explains the concept using structured presentations, supported by demonstrations and real-world examples that connect theory with practical investing. To reinforce learning, each lesson also includes practical exercises, assignments, or quizzes that help you apply the concepts you've learned. This structured lesson format transforms knowledge into practical understanding and prepares you to confidently apply these ideas in real investment situations. Every lesson in the Young Investor Blueprint has been designed to deliver both knowledge and practical application. The first component is the conceptual layer. Here, you'll understand the learning objectives, explore the underlying concepts, follow instructor presentations, observe demonstrations, and study real-world examples that simplify complex financial topics. The second component is the application layer, where learning becomes practical. You'll work through practical exercises, analyze case studies, participate in interactive discussions, complete knowledge checks, and reinforce your understanding through assignments and quizzes. Each lesson concludes with a concise summary that highlights the key takeaways and prepares you for the next topic. This balanced approach ensures that you don't simply memorize concepts, you understand them, apply them, and develop the confidence to use them in your own financial and investment decisions. As we move forward into the course, I encourage you to actively participate, complete every exercise, and think critically about each concept. The more you engage with the material, the stronger your foundation as a successful long-term investor will become. One of the greatest strengths of the Young Investor Blueprint is its flexibility. Every learner progresses at a different pace. Some concepts are understood immediately, while others require additional study and practice. This program has therefore been designed as a self-paced learning experience, allowing you to learn according to your own schedule without compromising the quality of your education. You can pause, revisit previous lessons, review important concepts, and practice exercises as often as necessary before moving forward. Each lesson builds upon the previous one, ensuring continuous progress while giving you complete control over your learning journey. Whether you're a student, a working professional, an entrepreneur, or a retiree, this structure allows you to integrate investment education into your daily routine without unnecessary pressure. Remember, investing is a lifelong skill, and mastering it requires understanding, not speed. Learn at your own pace, stay consistent, and allow your knowledge to compound just like your investments. This slide provides a complete overview of the Young Investor Blueprint. Think of this curriculum as a roadmap that guides you from the fundamentals of investing to advanced wealth creation. At the top sits the main program, which serves as the central learning framework. From there, the curriculum branches into 4 progressive subcourses, each focusing on a specific stage of investment education. Within every subcourse are carefully organized modules, and every module is further divided into individual lessons. This hierarchical structure ensures that no topic is studied in isolation. Instead, every lesson contributes to a larger understanding, every module develops a broader skill set, and every subcourse prepares you for the next stage of learning. By following this roadmap step by step, you'll build both knowledge and confidence while avoiding the confusion that often comes from learning investing in an unstructured manner. The strength of this program lies not only in its content but also in its carefully designed structure. The curriculum consists of 4 progressive subcourses, each representing an important stage in your investment journey. Together, these contain 24 comprehensive modules covering every major area required for intelligent investing. The first subcourse establishes your market foundation through 3 essential modules that introduce financial markets and their functioning. The third subcourse is the most extensive, containing 9 specialized modules dedicated to investment analysis, valuation, portfolio construction, behavioral finance, and risk management. This balanced structure ensures that sufficient time is devoted to each stage of learning, allowing you to gradually develop the knowledge and practical skills required for long-term investing success. The 4-level curriculum has been designed to maximize both learning effectiveness and long-term retention. The first advantage is clear logical progression. Every concept builds naturally upon previously learned material, eliminating knowledge gaps and creating a smooth learning experience from beginner to advanced levels. The second advantage is improved learner engagement. Breaking the curriculum into manageable learning units helps prevent information overload and keeps motivation high throughout the program. The third advantage is flexible delivery. Whether you're learning independently, participating in instructor-led sessions, or attending blended learning programs, this modular structure adapts easily to different learning environments. Ultimately, this carefully organized framework helps learners remain focused, motivated, and confident throughout their investment education journey. Beyond learner convenience, this curriculum offers several long-term academic and instructional benefits. The first is easy curriculum management. As financial markets evolve, individual modules can be updated, expanded, or refined without disrupting the overall structure. This ensures that the course remains current and relevant over time. The second advantage is enhanced assessment. Since the program is organized into lessons, modules, and subcourses, learner progress can be measured accurately through quizzes, assignments, and performance evaluations at multiple levels. The third advantage is global instructional alignment. The curriculum follows internationally recognized principles of instructional design used by leading universities, professional certification programs, and online learning platforms. This structured approach ensures that learning remains organized, measurable, scalable, and future-ready while maintaining a consistently high educational standard. As we conclude this curriculum overview, it's important to understand that this program has not been created as a simple collection of investment lessons. Instead, it has been developed using globally recognized instructional design principles that emphasize structured progression, measurable learning outcomes, and practical skill development. Every lesson, module, and subcourse has a clearly defined purpose and contributes to the learner's overall development. This systematic design ensures that concepts are introduced in the right sequence, reinforced through examples and practical exercises, and gradually integrated into real-world investment decision-making. As we approach the end of this curriculum overview, it's important to recognize that the Young Investor Blueprint is much more than a standalone investment course. It has been designed as a scalable education ecosystem that can continue to grow alongside both financial markets and the evolving needs of learners. The structured hierarchy of the program allows new modules, specialized topics, advanced courses, and certification pathways to be added seamlessly without disrupting the overall learning framework. This means your learning journey doesn't end with this program. It can continue expanding as your knowledge, experience, and investment goals evolve. Our vision is to create a comprehensive lifelong learning platform that supports investors at every stage of their financial journey, from their very first investment to advanced wealth management. Knowledge should never stop growing, and neither should your ability to make better financial decisions. The purpose of education is not simply to acquire knowledge, it is to transform knowledge into meaningful action. This curriculum has therefore been carefully structured to develop 4 essential competencies. We begin with market literacy, where you'll understand how financial markets operate and how investors interpret market information. Next comes business analysis, enabling you to evaluate companies objectively before investing your hard-earned money. The third stage is investment mastery, where you'll learn valuation, portfolio construction, diversification, and risk management techniques used by successful investors. Finally, all these skills come together in wealth creation, where you'll apply your knowledge to personal financial planning, long-term investing, retirement planning, and financial independence. By progressing through these stages, you'll move beyond simply understanding investments. You'll develop the confidence and discipline to make informed financial decisions throughout your life. Every aspect of the Young Investor Blueprint has been designed with one objective in mind: producing measurable learning outcomes. Rather than overwhelming learners with isolated financial concepts, this curriculum follows a carefully structured progression that develops knowledge step by step. You'll begin by understanding markets, then learn how to analyze businesses, evaluate investment opportunities, construct portfolios, manage risk, and ultimately build long-term wealth. Each lesson contributes to a larger learning objective, ensuring that theory is consistently reinforced through practical application. By the end of this program, our goal is not simply that you understand investing, but that you can think like an investor, analyze opportunities with confidence, and apply disciplined investment principles throughout your financial life. That is the true measure of successful investment education. Before we conclude, let's briefly summarize the key takeaways from this curriculum overview. First, you've seen the 4-level learning hierarchy that forms the foundation of the program, from the main program to subcourses, modules, and individual lessons. Second, you've understood the importance of progressive sequencing, where every topic builds naturally upon previously learned concepts, creating a smooth and logical learning journey. Third, you've learned that this curriculum has been designed as a scalable educational framework, allowing continuous expansion while maintaining its structured organization. Finally, you've seen that the entire program aligns with globally recognized instructional design principles, ensuring high-quality learning, measurable outcomes, and practical skill development. These key principles make the Young Investor Blueprint a complete roadmap for anyone serious about becoming a disciplined, knowledgeable, and successful long-term investor. As we conclude this introductory curriculum overview, I'd like to thank each one of you for joining me on this exciting journey. The Young Investor Blueprint is more than an investment course. It is a structured roadmap designed to take you from your very first understanding of financial markets to the ultimate goal of financial independence and lifelong wealth creation. Throughout this program, we'll explore 24 carefully designed modules across 4 progressive subcourses, always following one guiding philosophy: knowledge first, investing second. Remember, successful investing is not about chasing market trends or predicting tomorrow's prices. It is about building knowledge, developing discipline, making informed decisions, and allowing time and compounding to work in your favor. I sincerely hope you'll continue this journey with us from beginning to end. If you found this overview valuable, please subscribe to the channel, like this video, and share it with friends, family, and anyone who wants to learn investing the right way. Don't forget to turn on the notification bell so you never miss an upcoming lesson. In our next video, we'll begin the actual course by taking a comprehensive overview of Module 1, Understanding Nifty 50, where you'll learn why India's benchmark stock market index is the perfect starting point for every investor. After that, we'll dive into the 15 individual lessons of Module 1, covering each concept in a clear, structured, and easy-to-understand manner. Thank you once again for watching. I look forward to seeing you in the next video. Until then, keep learning, stay disciplined, and remember, every great investor begins with the right foundation.